Okay, so the second presentation, I just want to see, okay, I hope you're seeing that correctly. The second presentation, like I said, is related. It's also looking at the banking industry in South Africa. And this was another one of my master's students. They actually happen to be very good friends, although I didn't realize that until later in the year. And they both chose me as their supervisor, and they both wanted to look at banking topics. But Mathabo, what she looked at was the implications of the distinct or interchangeable use of the terms ESG and sustainability on the reporting by global banks. So this was actually not just South Africa. She looked more broadly. So again, by way of background, like I just said, there's definitely been this increased pressure to report on ESG and sustainability, and the banks, as we've just seen in the previous presentation, they have an impact on sustainability, and they're impacted as well. But this ESG versus sustainability, I think just to mention, this reporting there are broadly two camps in terms of this reporting, and the one has a more financial focus, and that's understanding and reporting the impact of the external, the environment and the society on a business, on the company. So in terms of their impact, the risks that they experience because of that. And so that focus of the reporting it's focused on investors, and that's typically going to be ESG reporting. The other way that reporting is done is looking at what is the impact of the company on the external, on the environment and society. And so there you have a broader range of stakeholders that are going to be the audience. And so that's typically what we call sustainability reporting. And if you look at what guides these reports, the sustainability reporting, that's guided by the Global Reporting Initiative, the GRI, whereas the ESG reporting, that will be bodies like the IFRS Foundation. That's their focus is on investors as the primary audience. TCFD, that has now been consolidated into the IFRS Foundation, SASB. Many of the bodies had investors as their primary focus, and many of those have now been consolidated into the IFRS Foundation. So we broadly have two camps. We've got the investor-focused IFRS standards, and then we have the GRI sustainability multi-stakeholder focused reporting. So what the purpose of the study was to look at all the reporting that's being done by banks and to see if there was firstly an acknowledgement of the difference between ESG and sustainability. So that's the difference in the direction. Is it internal or is it external, inwards or outwards? And what impact does this distinction or non-distinction have? And the reason for wanting to know this is because if the audience is different, and are they then specifically only preparing reports that are focused on investors, or are they thinking about broader stakeholders in the reporting that they're doing? So what Mathabo did was she looked at the reports that were used to report on both ESG and sustainability. She wanted to understand, as she got from the reports, what was the purpose of the reports, what's the target audience, and what did they put as the materiality considerations of the reports as well. And she used stakeholder theory throughout. In terms of the method, she did a content analysis of these ESG and sustainability disclosures. She looked at integrated reports, sustainability reports, ESG reports, whatever reports that were available from these different banks that provided these disclosures. She focused on the environmental and social disclosures because sustainability is focused on economic growth, social impact, and environmental impact, and ESG is focused on environmental, social, and governance. So the environmental and social was the overlap between the two, and so she focused on that. She used the years 2019 and 2021. When she was doing her data collection in 2022, 2021 was the most recent year, and then she wanted to do a comparative year, but 2020, as we know, was COVID. So she went back to 2019 so she could see the pre-COVID effect, and just so that it wasn't affected by whatever was happening with COVID. She looked at the top 5 listed banks in South Africa, Japan, the UK, the US, and France. And she chose these countries because they're all known for having strong reporting. And in total, it was 102 reports that were analyzed. So that 5 banks in 5 countries, so 25 banks over 2 years. So there were 50 years, 50 reporting periods, let's put it like that. So it was on average 2 reports per bank that she was looking at. And she specifically wanted to see if inward matters, so that outward, the impact of the external on the bank, that inward direction, if that was referred to as ESG, and outward matters, the effect of the bank on the external, if that was referred to as sustainability. Of course, there are limitations. It was qualitative research, so there's that subjective nature that's always going to be there. It was limited to these 25 banks in the 2 years. And of course, if we looked at a different period, we might have had different outcomes. And she only looked at reports that were the integrated reports, sustainability report, where they were specifically reporting on these things. If she looked at their websites or other press releases, she might have got other information as well. So the first area was then looking at the distinct or interchangeable use of the terms ESG and sustainability. In South Africa, one bank did acknowledge the difference, but the other 4 just used the terms interchangeably. And in the other 4 countries, there was no distinction made at all. And some of them even, rather than even calling it sustainability or ESG information, they just referred to it as non-financial information. So really the question here then is, are the stakeholders' needs being met if they're not even aware of, or they're not even acknowledging the difference between the different types of disclosures? She then looked at the number of reports that were used, and you can see quite a variety. So the South African banks, one of them used, or one of the years, there were 15 reports across the 5 banks. So that's on average 3 each. And that varied between ESG reports, integrated reports, and sustainability reports. In Japan, the UK, and France, and the US, you can see the yellow, that's the annual reports that are used there. So integrated reporting is very much there in South Africa and Japan, and a little bit in France, and whereas the annual reporting is the way that it's referred to in Japan, the UK, and the US. So different reports that are being used. And there is a debate in the literature about whether there should be whether everything should be integrated into single reports or whether it should be split out into different reports. There's been some research that said when there are distinct reports that are provided, there's better quality reporting in those distinct reports. But there is other pressure to be consolidating everything, integrating everything together. So yeah, again, the stakeholders' needs, are they meeting the stakeholders' needs in what they're actually doing? The next thing that she looked at was the users of the reports. So the users should be a key factor in determining the format and the content of the report. You should be thinking about what your intended audience is, and ESG reports should be focusing on investors as the target audience, and sustainability reports should be focusing on a broader range of stakeholders, including investors, but a broader range of stakeholders as their target audience. So if we look at what happened in the different countries, South Africa, they had, for the integrated reports, they acknowledged investors as the audience. And for others, they said it was a broader audience. In France, they just generally didn't disclose it. In Japan, it was very broad, including potential investors, society, employees, so quite a broad range there. And in the US, also similarly broad. For their annual reports, they identified shareholders, clients, teammates, leaders, partners in the community as well. And then for the ESG reports, they acknowledged all stakeholders would be the target audience. And then for the UK, for the annual reports, which was the majority of the reporting there, the specific audience was shareholders. So are they addressing the needs of the broader stakeholders then if their target audience is the shareholders? In terms of the purpose of the reports, so for South Africa, they said that the integrated reports was focused on value creation, which is in terms of the International Integrated Reporting Framework. And for the other reporting, they said it was about managing risks, their societal impact, focusing on the SDGs, the Sustainable Development Goals. In the other 4 countries, it was often not provided what the purpose of the reports was. Where they did give something for integrated reporting, it was value creation as well, again, in terms of the International Integrated Reporting Framework. For the sustainability or ESG reports, they said the focus was on environmental and social issues. And for annual reports, specifically, the reason for reporting was on the financial performance. Then if we look at the materiality, so there's a lot of conversation around materiality. In the EU, we've now been hearing the term double materiality as well, although that's been more recently coming out. None of the banks spoke about double materiality, but this was only going up to 2021. I think if we looked at 2022 onwards, we would definitely start seeing talk of double materiality, particularly probably from France and the UK. But In South Africa and the UK, most did provide their materiality definition. They said how they determined it. In the integrated reports, it's generally focused on the value creation, the investor determination, whereas for the sustainability reports, it's looking at broader impact of the business on the external. And in the UK, again, their predominant focusing is on the annual reports. And there they also said, specifically, it's on the financial side. That's how they determine the materiality. But I think as we go forward, we'll start seeing more in terms of double materiality that we hear being spoken about. So in conclusion, it was found that ESG and sustainability, the terms are being used interchangeably for both inwards and outwards issues. And reports are just addressing both. They're not distinguishing between the two. There's also a lack of disclosure in terms of who the target audience is for reports, how they determine materiality, what the purpose of the report even is. And so this really leaves the question then of, are the stakeholders' needs being specifically addressed? Or is it that they're just trying to do a broad brush and they're not thinking about individual stakeholders and what they might need? In terms of areas for future research, this went up to 2021, and there's definitely been a lot of movement. So doing a more recent study would be good to see what is happening more recently, looking at other industries, other countries. Also doing a specific comparison between where there's mandatory and voluntary reporting and seeing if there's a difference over there. And then also talking to the stakeholders and seeing, do they feel like their needs are being met by this blended reporting, or does it need to be distinct reporting? If the stakeholders don't mind, then maybe it actually isn't an issue. But definitely speaking to the stakeholders and seeing what they have to say. So thank you very much again, and I look forward to your questions.